Hello everyone, and welcome back to TradeX Pro. In our first episode, we dove into the basics of candlestick charts, covering the essential components and their significance in market analysis. Today, I'm excited to guide you through 5 different types of candlesticks. Each type tells a unique story about market behavior and trader sentiment. By the end of this video, you'll be able to identify these candlestick types and understand what they signify about price movements and potential trends. Before we begin, let's cover the basics of support and resistance. They are levels where the price hits and bounces off. Understanding these levels helps traders make more informed decisions about when to enter or exit trades and anticipate potential price movements. Let's start with support. Support is a price level where a falling stock tends to find buying interest, preventing the price from falling further. It's like a floor where the price hits and bounces off. On the chart, you'll see the price fall to this same level multiple times. Each time, buyers believe the price is at a good value or cheap enough and decide to buy, creating demand and pushing the price up. This repeated buying at the same level creates a support. Let's move on to resistance. Resistance is a price level where a rising stock tends to face selling pressure, preventing the price from rising further. It's like a ceiling where the price hits and then bounces back down. On the chart, you'll see the price rise to this same level multiple times. Each time, sellers believe the price is high enough to sell and make some profit. This creates supply, pushing the price down and establishing a resistance level. Here's an example. Prices initially fall twice, hitting the same level, which we identify as support. Meanwhile, prices attempt to rise but fail to break through a specific level multiple times. Sellers see this level as an opportunity to sell and lock in profits, creating resistance. Eventually, a lot of buyers step in and push the price up, breaking through the resistance level. Now that you understand the basic concept of support and resistance, we'll use this throughout the video. Let's go back to the 5 types of candlesticks, starting with number 1, the momentum candle. A momentum candle has a long body, little to no wick, and is supported by significant volume. It can appear individually or in a group with increasingly larger bodies, indicating strong market momentum. On the chart, you can see 2 groups of bullish candles with larger bodies. These are momentum candles. It's important to carefully consider this type of candlestick near support or resistance levels. Momentum candles can appear in both bullish and bearish markets. In a bullish market, each successive candle shows an increasing body size, indicating rising momentum. Likewise, in a bearish market, each successive candle also has an increasing body size, signaling intensifying downward momentum. Let's look at a real chart example. As you can see, the market is in an uptrend. The point on the left was previously the highest price point at that time. Over time, the market retracted and then bounced back up with momentum. 3 consecutive green candles, each increasing in size, broke the previous high, establishing a new high. Shortly after, another set of 3 momentum candles created yet another new high. Another example. On the left, the price attempts to rise twice but fails at the resistance. Then, the market gains momentum, as shown by 4 consecutive bullish candles with increasing size. This momentum allows the price to break through the resistance, creating a new high. The second type of candlestick is called the shrinking candle. As you can see from the picture, it's the opposite of the momentum candle. While momentum candles illustrate momentum gain, shrinking candles show momentum loss. The shrinking candle is a group of candlesticks where the body gets progressively smaller. They can appear in both uptrend and downtrend markets, indicating a decrease in momentum and suggesting a potential market reversal. Let's look at some examples. Initially, the market is in a consolidation phase, with the price fluctuating within a narrow range. The price attempts to break through resistance at least 3 times but fails each time. Eventually, buyers step in, creating high demand as illustrated by several momentum candles. With sufficient momentum, the price breaks through the resistance. In contrast, when the market shows shrinking candles with progressively smaller bodies, it indicates a loss of momentum. This pattern suggests that the market may stall and could be poised for a reversal. Here's another example. The market shows momentum loss through a series of shrinking candles. When you observe consecutive candles of the same color, with each successive candle having a progressively smaller body, it indicates a weakening trend. This pattern suggests that selling pressure is decreasing, which may signal that the market is losing momentum and could be on the verge of reversing direction. Next, we have candlestick type number 3, the long wick candle. A long wick candle has a small body and a long wick, reflecting market indecision. If this candle appears near support or resistance levels, it may signal a potential trend reversal. The wick can be either a single long upper wick, a single long lower wick, or multiple wicks on either side. Now, let's explore the psychology behind the wick. Suppose the price is rising towards a resistance level and you see a candle with a long upper wick. This long wick can be visualized with an expanded line graph to the right. The end of the wick represents the highest price reached during that period. This suggests that the price was pushed up to this point, but buyers were unable to maintain it as sellers pulled the price back down. This high selling pressure indicates a potential trend reversal. An example to the left demonstrates this concept. The price initially rises towards the resistance and then pulls back. It tries again with consecutive green bullish candles, showing momentum up to the resistance level. However, the market experiences a battle between buyers and sellers, as indicated by long wick candles. Eventually, sellers prevail and push the price down. When you observe multiple long wick candles, as shown on the right, it increases the likelihood of a market reversal. Buyers attempt to push the price up repeatedly, but each time, sellers manage to drive it back down. Once buyer interest fades and there are no more buyers pushing the price higher, the price may experience a significant drop. One common misconception among beginners is misunderstanding the long wick candle. They might think that the two candles indicated by the arrows are similar and have the same meaning. However, long wick candle number 1, as previously described, indicates selling pressure and suggests a potential market reversal. In contrast, long wick candle number 2 signifies buying pressure, which may lead to a continuation of the trend or a break above resistance. Now, let's explore the long wick candle in a downtrend. The concept and psychology are similar to those in an uptrend. You have a support level, and as the price approaches this support, a long lower wick candle appears. The line graph to the right illustrates that while sellers attempted to drive the price lower, buyers saw the price as attractive and stepped in to buy, pushing the price back up. This buying pressure suggests a potential reversal in the trend, signaling a move upwards. The chart on the left illustrates a long wick candle during a downtrend. Initially, the price drops sharply but then rebounds, establishing a strong support level. When the price returns to this level, two candles with long lower wicks appear, signaling strong buying pressure. After several days of intense trading, the buyers ultimately gain the upper hand, driving the price upward. Similarly, in the chart on the right, the price experiences a sharp decline and then stabilizes briefly. During this period, both buyers and sellers enter the market, attempting to sway the price in their favor. Ultimately, the buyers prevail, as indicated by the appearance of a long wick candle, signaling their victory and pushing the price upwards. Moving on to the fourth type of candlestick, the indecision candle. This candle features a small body with long wicks on both ends. The small body of the candle indicates that the opening and closing prices are very close to each other, suggesting minimal movement within the period. The long wicks, on the other hand, demonstrate significant price fluctuations, highlighting the struggle between buyers and sellers. In a strong trend, an indecision candle can signal a potential reversal. The small body combined with the extended wicks suggests a loss of momentum, indicating that the market may be preparing for a change in direction. During a consolidation phase, however, An indecision candle may simply indicate a brief pause in the current trend with the potential for the prevailing trend to continue. Let's examine a real chart example. When an indecision candle appears at an extreme point or a support level during a downtrend, it signals a potential reversal. This is because the candle suggests that momentum is weakening and that the price may be poised to change direction. Similarly, in an uptrend, if the price reaches an extreme point or a resistance level and an indecision candle forms, it also indicates a possible reversal. In this case, the presence of the indecision candle suggests that the upward momentum may be faltering, signaling a potential shift to a downward movement. For a trend continuation, indecision candles act as a moment of hesitation. They typically appear during pauses, consolidations, or market corrections following a strong trend. These candles indicate a period where buyers and sellers are contesting control, creating temporary uncertainty. Once this battle resolves, the price is likely to resume its previous trend direction. During a strong downtrend, indecision candles may appear during a pullback. Investors are advised to wait until this retracement concludes before entering a position, as this allows the market to stabilize and potentially resume the downward trend. The final type of candlestick is the inside bar candle. This pattern involves two consecutive candles, the inside bar and its preceding candle, known as the mother bar. For an inside bar to be identified, its entire range must be completely contained within the range of the mother bar. The mother bar has a broader range stretching from its highest to lowest points compared to the inside bar. It's important to note that the color of the candles is not relevant in this pattern. The key factor is that the range of the inside bar is completely contained within the range of the mother bar. When this pattern occurs near a support or resistance level, it often signals a potential reversal. This is because the inside bar formation indicates a period of indecision or reduced momentum, suggesting that the price may struggle to continue in its current direction. For a clearer understanding, consider this illustration. On the left, the price rises continuously, represented by three green candles, including the mother bar. This indicates a strong momentum. In contrast, if an inside bar forms and is entirely contained within the range of the mother bar, it signals a weakening of momentum. When this pattern appears at a support or resistance level, it often suggests a potential reversal in the trend. Let's examine some examples. In an uptrend, if the price starts to show a loss of momentum, you may notice three consecutive candles with shrinking bodies. Among these candles, an inside bar can appear. In this scenario, bar 1 is the mother bar, and bar 2 is the inside bar, with its range fully contained within that of the mother bar. Another example illustrates a similar pattern. A pair of a mother bar and an inside bar appears at the peak of the uptrend. In this case, the inside bar is fully contained within the range of the mother bar, signaling a loss of momentum and suggesting that the trend may reverse downward. Likewise, in a downtrend, a similar pattern can be seen. If a mother bar and an inside bar form at the bottom, it indicates a weakening of momentum. This pattern suggests that the downtrend may be losing strength and could potentially reverse upward. Sometimes, multiple inside bars may be confined within the range of a single mother bar. In this example, bars 2 and 3 are inside bars, and their ranges are fully enclosed within the range of the mother bar. This pattern also suggests a loss of downward momentum and may indicate a potential trend reversal. Alright everyone, these are the 5 candlestick types we have just covered: momentum, shrinking, long wick, indecision, and inside bar. By mastering these patterns, you'll gain the ability to better predict market movements and make more accurate trades. Next, we'll delve into how to effectively integrate these candlesticks into your overall trading strategy. This integration will help you enhance your trading accuracy and achieve more consistent and successful results in the market. Starting with the first example. On your left, you can see the price bouncing off vigorously at the same level twice. This establishes a resistance level. Next, when the price rebounds and rises back to this level for the third time, Pay attention to these 6 candles. The first 3 candles progressively become smaller as they approach the resistance level, resembling shrinking candles, which indicate a loss of momentum. Additionally, candle number 4 shows strong selling pressure due to its long upper wick, suggesting a potential trend reversal. This trend reversal is confirmed by 3 consecutive downward momentum candles. At this point, you may consider selling your stock or entering a short position at candle number 5. Here is another example. In a downtrend, the price falls continuously and then bounces back up, establishing a support level. Shortly after, the price falls back to this level again. You may notice a group of indecision candles indicating hesitation in the market. One of these candles also has a long lower wick, illustrating buying pressure. This combination of market hesitation and buying pressure suggests a potential trend reversal. However, we do not enter a long position yet. Once a momentum candle appears and confirms the trend reversal by breaking through the previous high, we may enter the market. The combination of candlestick patterns you just witnessed resembles a double bottom pattern, which we will cover later in this series. Example number 3 features a trend continuation chart. On your left, in a bullish market, the price rises continuously for almost a week before encountering a slight pullback. During this pullback, you'll notice a series of shrinking candles, indicating that the downward momentum is weakening and the pullback is not strong. Additionally, on the third candle, the market shows indecisiveness with an indecision candle, further supporting the slowdown of the pullback. Once a large bullish momentum candle appears, it signals a continuation of the bullish market. At this point, we can confidently buy a stock or enter a long trade position, assured that the uptrend will persist. Now, on your right. Initially, the market is undergoing a consolidation period, with the price contained within a range. Let's examine these 5 candlesticks closely. First, candle number 1. A large bearish momentum candle confirms that the price has broken out of the consolidation range and is poised to move downward. Candles 2 through 4 display indecision regarding the downward movement initiated by candle number 1. Despite this indecision, sellers ultimately gain the upper hand and drive the price lower, as demonstrated by candle number 5. You may consider entering a short position at the close of candle number 5. That wraps up today's episode on the 5 key candlestick types. Mastering these patterns will enhance your ability to predict market movements and improve your trades. Stay tuned for our next episode, where we'll explore the most common candlestick and chart patterns. Thank you for watching, and as always, happy trading.